Okay, welcome to the Swing Trading with Cycles channel. This is part 2 of our commodity review. It is November 30th, 2022. Incidentally, this is actually a day where Jerome Powell is going to be speaking, the Fed chair, at 1:30 Eastern. So that's certainly going to have a big impact on really all assets, including commodities. This video is going to focus on the ratio charts, looking at commodities versus the S&P 500, the Dow, the Qs, gold, silver. We've decided to add platinum to the mix here. We didn't mention that in the previous video. And if you haven't seen the previous video, definitely take a look at a link in the description for that video. And depending on what platform you're on, you should also see it sort of show up in the upper right hand corner. You should have an option to click on that video to go watch that. That reviews the long-term cycles. And we also actually even go down to the micro level and look at what would it, and the theme is we are declining into a major cycle low here. And so we want to position ourselves so that we can get in as close to the bottom as possible after we've confirmed that it's happened, right? And so just to like really recap, this is the CRB commodity index chart. This is the quarterly chart, and I'll just, hopefully this is starting to kind of gel for you in terms of like seeing these swing lows and swing highs, right? Like these are swing lows of major rallies. And then these are your swing highs. That's the swing high, the biggest, the granddaddy of them all. Right? And yeah, and of course you've got this one, right? And so let's just orient ourselves in terms of the percentage change here, right? And we'll actually do the one that looks at time as well. So this move here was about 70% in 13 quarters. And then you had this move here that was 68%. I'll add the crosshairs back on. And you had this move, right? Like, and technically this is a swing high as well, right? So like from that to that is 150%. Oh, that is a long move, 15 quarters. And then from that to that is actually 226%. And again, these are, that's 26 quarters. So we're talking about, what is that? That's like 7 years. Okay, so this current one from the Pico bottom has been, what is that? Sorry, let me try that again. There. Okay. So about 220%. Again, that's from the very bottom, and that's in 9 quarters. So we have had massive rallies before, right? Like, this rally here was, I'll take the crosshairs off now. And I guess let's quantify this one here. Again, just looking at these from the Pico bottom, obviously it's impossible to buy there, like realistically. But, this is just kind of for illustrative purposes, if you will. Okay, so this is helpful, right? So we had this massive rally of 226%, but it took us 26 quarters, which is, almost 7 years, right? And then we have this period where we've rallied for 9 quarters and had about the same percentage gain. Like, think about that, in 9 quarters versus 26. So in a lot of ways, this is a superheated rally, which again means the decline could last a while and it could be actually fairly deep. Like we could see a capitulation down to like there, the low 220s, for instance. Look at this capitulation here, right? After this massive move. So that's the absolute chart. And the point there is that this thing can rally for really long stretches of time. This was a rally for 13 quarters, 71%. This is a rally for 7 quarters, 70%. So when we catch that next cycle low, it could be very profitable. Now let's move on to the ratio charts, if we will. So We'll start with well, actually, let's look at all the ratio charts together. So, and we happen to have 8 of them, so it works out kind of perfectly. So, starting from left to right, we have the ratio to S&P, Dow Jones Industrial, QQQ, which is the Nasdaq 100, gold, ratio to silver, ratio to platinum, ratio to Bitcoin, and ratio to ETH. Like, I'm not doing crypto as a whole. I'm doing specifically Bitcoin and ETH because they are very different. And so this is the ratio of the commodity index to the other asset. So if this is going down, it means the commodities are underperforming the asset, and when it's going up, commodities are outperforming. And what you can see, just what should kind of draw your eye is there's a lot of red on this chart. These are annual charts, excuse me. So every year here is 1 year of price action. And obviously the crypto ones don't have a lot of data because crypto hasn't been around for quite so long. But you see a lot of red and like these massive downtrends. These are the 3 equity ones, right? You see these massive downtrends, right? And a lot of red, like many, many years of lower, right? And actually the same thing for gold, right? So gold has been in a bull for a long, since 2000 more or less. And so it has, the commodities as a whole have underperformed it. But notice this little flicker of green everywhere, right? So, and to be clear, in almost all cases, it's a swing low for commodities versus the asset, which tells you that commodities may be setting up for a longer term rally versus these assets. And now, remember though that we are also moving into a longer term cycle low for commodities. Now the catch is most of these other assets are also moving into their own long term cycle lows. And that's why ratio charts, it's complex. You need to consult the absolute chart as your arbiter of truth, and you use the ratios as an additive measure, right? And so what this is really telling us is when we do get that long term cycle low for all these assets, you might expect commodities to rally harder out of that low than these other ones. So let's look at and these are all the charts together, obviously. Let's start to look at them individually. So let's look at the S&P. And so this is our regular setup where, the left hand, this is your daily chart, and on the left, your weekly chart on the right. Below the weekly chart, we have the monthly chart. And then in the lower left-hand corner, in this case, we have the quarterly chart. And so if we actually zoom in on the quarterly chart, we were just looking at the annual chart, in that multi-panel, you see this massive downtrend, and then boom, that is a swing low, folks. That swing low occurs in Q2 of 2020, right? So that's your COVID low. Boom. We consolidate inside the range of that candle for actually 1, 2, 3 quarters. We bounce, we try to get out of the range, but we can't. 4, 5. We finally break out in quarter 5. We come back and back test it, and then boom, off to the races. Now, this is a ratio chart, so absolute prices are doing different things at this point. But what this is telling you is since this ultimate low, commodities have been holding their own versus the S&P 500 versus this like crazy downtrend. And you can even see within this downtrend, you can see the little lower highs. Like that is a little lower high, right? That's a little 2-quarter rally. This candle used to be green. You have this candle which stayed green, this candle which stayed green. So you have these little periods, right? And let's just see, how long is this? That's a period of 47 quarters. Wow. So declining in a pronounced downtrend for 47 quarters, making lower highs along the way, as downtrends do. This is clearly not a downtrend anymore. And some people would draw a trend line. So sure, if you drew a trend line, this clearly has broken that trend line. But what I say to you is forget the trend line for a second, friend, and think about higher highs and higher lows, right? Once we made this low here, and then we started consolidating, you were on the lookout for a break above this high to create a swing low, because a swing low is just another word for a higher high, right? A swing low is a structure that's left behind on the chart when you have a higher high. And so we've been making, so we have this high here and then this higher low. this high here. And so now the question is, as we fall into that long-term cycle low, we've clearly gone red versus the S&P for the last 2 quarters. So remember, the big picture chart, the annual chart, we're still green. And that's important to understand. This upper wick here is those 2 quarters that are red right now. So right now, approximate term, we are going lower, like on the quarterly level. Let me go back to the quarterly. And again, this is the ratio of the S&P to the commodities. So, commodities to the S&P. So another way to think about this is, for the last few quarters, the S&P has actually been outperforming commodities. Commodities have been going down by more than the S&P has been going down, since obviously everything has been going down in 2022 more broadly. But this is just consolidation within this range. And I won't go through each index at the same level of detail, but you can pull up a chart and do a similar thing. We'll be watching these. We're going to have alerts set so that we kind of understand as things unfold, when are we going to, because this is going to tell us when we're seeing capital flows from commodities to SPX. It's already started, right? This is what that's telling you, right? Now it's consolidated a little bit, kind of catching its breath. And so you could see a world where we descend for a little bit longer, make that long-term cycle low. Again, as we talked about in the previous video, part 1 of this series, definitely take a look at that. We're thinking we might get that low somewhere around mid-2023. So maybe you get another couple of candles here, right? Something like that. And then it's like, okay, this structure is a higher low, and we just kind of we're sort of off to the races, right? And so it's essentially like a reverse symmetry move of this whole downtrend. Just we start to kind of work our way up. And of course, we don't go up in a straight line. We're going to have higher lows along the way, which will be swing lows, opportunities to potentially add or get long if you haven't already. So that's the quarterly chart. And if we look at the monthly, it's just a more detail from the quarterly. You're seeing we have this kind of doji-like candle here, but really more of a shooter than anything else. And this is that consolidation that we've been seeing, and those red quarterly candles. Again, same kind of idea, but you can see this is clearly a bull flag, right? Again, we would expect a little bit more of a breakdown, especially as we head into that long-term cycle low. And if we think about the weekly, clearly this was an important swing low here on the weekly, right? And we are now, so we've now rallied, we then rallied 1, 2, 3, 4, 5, 6, 7, 8 weeks. And now we're declining into the next weekly cycle low. And so that's important because understanding how the long-term cycle unfolds will be in the context of these shorter cycles. This is a similar thing that we did with the commodity index itself. We won't necessarily do that with the ratio charts, but important to note these lower highs, right? So that tells you we're going to get another weekly cycle. It's going to be left translated and it's going to be bearish. We're going to continue to make lower lows and lower highs is the expectation, right? So that's your versus SPX. I'll look at the Dow, and one thing that you'll notice for the Dow is that commodities are underperforming more, right? Like this is your monthly chart, and we're making a lower low here. And the reason for that is actually pretty clear, right? It's just telling you that the Dow is actually outperforming the S&P. And so if the Dow is outperforming the S&P, it stands to reason that commodities are going to have a harder time outperforming the Dow, right? If that makes sense. But which means the Dow is a little bit stronger versus commodities. But it's the same principles. We're going to get that long-term cycle low. And the Qs, same thing, but in reverse for the Dow versus the S&P, which is to say the Qs are the weakest between the S&P and Dow. And so that's why you actually still have a green month versus with commodities versus the Qs. So the point here is the Qs are weaker than the other two indices, which means commodities are actually going to break down less versus the Qs than they are for the other indices. In fact, you could see a world where this pivot never even breaks. That'll be interesting. Because remember, again, this is the way to think about it. Everything is moving into a long-term cycle low. So it's really a question of what is going to do the best going into that long-term cycle low, which is to say going down the least, and is going to rebound the most violently out of it. if we look at versus gold, now we're looking at the precious metals, and remember that gold is part of the CRB itself, right? It has a precious metals overall has a 7% weighting. Gold in particular is 6%, and silver is the other 1%, I believe. And so, if we look at the quarterly chart, you can see. I'll zoom in here. You can see we just went red this quarter, whereas versus the S&P, we've been red for the last 2 quarters. So, gold is actually, or I should say, gold is underperforming the. I should say commodities have outperformed gold for longer than they did stocks. So this is going to be interesting to see when we do get that bottom. This suggests that commodities as a whole may rally more. And again, thinking that 40% of this is energy and the other 40% is agriculture, that's going to be an interesting thing to watch. And if we look at the, so that's your quarterly, and on the monthly, you can see we're starting to kind of break down here a little bit. But this is, I mean, what a clean little bull flag this is, right? So certainly we're going to see some downside, but this is suggesting to me, interestingly enough, commodities might do much better versus gold than even the S&P. Whereas, notice, silver is actually outperforming, and this is good. Silver is doing better than gold, is what this is telling you. This is a monthly chart of commodities versus silver, and you can see we're probably going to get a breakdown. We haven't talked about to this line, this teal line here, which is the 50-period moving average. And so in this case, the 50-month moving average. So that's and we're looking at the broadest. We're looking at the sort of monthly charts here, and then we look at Bitcoin. So Bitcoin is an interesting one. Let's go back to the quarterly chart. So we can see this steep decline just means Bitcoin has just kind of crushed commodities, which makes sense. It's kind of crushed everything. But then we have this important swing low here. And then we have a higher low here, so that we held. And then we kept moving. And now we have another higher low, which tells me that unlike other things where commodities is starting to break down, it's actually just continuing to rally versus Bitcoin, and rally hard. I mean, look, to be clear, we are green on the quarterly candle, right? So, and that's not the case for pretty much anything else. So that's an important one of these things is not like the other sort of thing. And you can see on the monthly chart, and again, we're in the basement right here, in terms of this decline, but this is definitely starting a nice little up move here, which is not surprising. Another way of thinking about this is Bitcoin is kind of in the trash bin. And similar thing for ETH, right? So a little bit weaker, you can see it's a doji of a quarterly candle versus the green solid candle. And the Bitcoin quarterly candle was making a new high on the quarter. In this case, it's an inside quarter. So clear dispersion between ETH and Bitcoin, which is not surprising. ETH is outperforming Bitcoin very, very clearly. And finally, we look at platinum. Wow, what a big breakdown, right? And so you can see some of these charts are not like the others, which was kind of clear in the annual chart. Wow, so that's a pretty big breakdown. Right, and so this move lower, it really just reflects the strength of platinum recently. Platinum really does. It basically, the swing low that the swing low that we see for platinum is directly inverse to this swing high that we have for the ratio of the commodities index to platinum. So that's actually a pretty good. That's an interesting sign, because this is your quarterly chart, and this kind of suggests that there's some kind of double top here, right? Which, maybe even kind of triple top, which kind of was just bullish for platinum, in that, well, it's bullish for platinum versus commodities. If it's truly bullish for platinum in absolute terms, that kind of remains to be seen. So. We'll close out here, and just to recap, these cycles we'll look at the monthly chart so we can see all the these cycles last for a really long time. And I'll actually take off all of the drawings. I'll hide all, right? You can just see it visually. This is a really long time up, right? This is a really long time up. This was a really long time up, right? This has been 26 months. We topped out in June. Now, so far, the drop has not been that dramatic. I mean, look at the drop here. Like within 3 months, you had three really solid down months. Like if we zoom in, like boom, 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 and then this one that really kind of took the cake. And so we are probably in for more upside here after this. Like this cycle low is probably going to be a higher low, and we'll be watching that on this channel. Like, do we turn out to be right? Right, like something like that. Then maybe even something like that. Then a move back up, right? To pop, test the all. I don't see why wouldn't test the all-time highs, right? Why oil might not go back to its highest price ever. Natural gas is the other big component within energy and agriculture, etc. There are a lot of inflationary drivers to the global macro situation in the next, several years. So we'll leave it at that. And as I said, definitely take a look at part 1 of this video series so you get kind of the full picture. But that was our overview of commodities using ratios to kind of give some context. But thank you for watching.